issue about creditor transparency is fundamental, because if we have transparent creditors, we're not going to have opaque loans and discussions that are not really transparent, contracts that are not really very transparent. So that creditor transparency issue is a very important aspect. But again, that can only happen when our officials, debt management officers, the finance ministers, central bank governors, budget and planning, and so on, are well averse with what it takes to have a better, clear negotiation of their debt, and also in their discussion with creditors to know what to ask for, when to ask for it, and how to ask for it. Because if we demand transparency from our creditors, then they have no options than to be transparent. Because again, let's not forget that creditors thrive on the interests that we pay them as if you are the debtor. So in that case, the more the creditor can make money off you, I mean, if you leave that loophole, they will make money because they're in the market to make money. But then it is us as Africans that should be able to demand that transparency and not do below the table deals with creditors, and make sure that we engage the right experts whenever we're negotiating our loans, so that we get the best deals that is necessary for us. But also, moral justice demands that we don't become vulture lenders in terms of taking advantage of countries who are in their fiscal needs and lack the capacity to negotiate better. So it also calls on creditors to do business the right way and not prey on the ignorance or lack of capacity of many African countries. But from the African Development Bank Group, my perspective is always that we as Africans need to up our game. And that is why the launch of the Public Financial Management Academy, that is why the launch of the Macroeconomic Policy Management Academy and the Public Service Delivery Index, which we are going to be launching at the forthcoming AU Summit in Addis Ababa. So the point here for me is that there are several instruments that have been created by the African Development Bank to help countries address not only the debt issue, but many of our development challenges. It behoves on us as Africans to take it seriously. And that is why, of all the initiatives we have, this Debt Management Forum for Africa is very dear to my heart, because my thinking is to create a space where Africans can talk frankly to each other, hold each other accountable. My expectation is that we'll reach some agree on a communique after this meeting by the debt managers, by the finance ministers and central bank governors. And in the next forum, we check how far we've gone. Because one of the things in Africa is that we love attending conferences, we love going for negotiations, we discuss, we talk. Africa is the most discussed continent in the world, as far as I can understand. And then we have all those discussions. Sometimes resolutions are made, but we do not follow up. Implementation, implementation, and implementation. And that is why we are launching the Public Service Delivery Index, to give the tools in the hands of citizens to finally see how our public service servants are delivering on their public services, and also how we perceive the quality of the public services that are delivering for us. And that will allow us as citizens of Africa to hold ourselves and our leaders accountable for what they do. And then one of the highlights for me of these recent months is also what happened here in Abuja on the 10th on the 30th of November 2024, right here at the Central Bank of Nigeria, where the Minister of Finance and the Central Bank Governor hosted all the other ministers of finance and central bank governors and their technical experts in the AU Technical Committee on Finance, Monetary Affairs, Economic Planning, and Integration. And we consider two major landmark initiatives. One being to set up an Africa Financial Stability Financing Stability Mechanism, AFSM. That AFSM will be a tool to help address most of the issues we have been discussing here. A new institution that is going to help in addressing debt refinancing in Africa by African governments themselves. And that way, you know what it will mean if you are running to your neighbor instead of to a distant creditor. It's why you came again. Why the same you? You know, that peer pressure will help to put probity and prudence in how we relate with that on the continent. For me, the landmark thing is having the STC approve the proposals and the statutes for the proposal for operationalization study report, which we prepared for the AFSM, and the statutes for establishing the Africa Monetary Institute for presentation to our heads of states at the summit in 2025, February 2025. So I would like to live to see a day when Africans are now able to handle their monetary policy issues at home and their fiscal policy challenges at home, and only go out when there are things we have tried to resolve and we cannot resolve. Then we reach out to partners. The relationship we have now is that for every little fiscal stress, every little liquidity challenge, there's that tendency of thinking, oh, let's go outside to get support. And if we're able to do that internally, I think we're setting the rubrics for Africa to finally become economically stable and build more resilient economies for our future generations.
So looking at the continent and all of these efforts, getting Africans to actually implement it is another side of the story. So what can we expect, when it comes to the issue of implementation after all the beautifully crafted ideas?
The Debt Management Forum for Africa is set up to do one single thing, and that is to create a forum for Africans to have deep, frank, and brutal conversations around the issues about debt and debt vulnerabilities in Africa. And the reason is very clear. We've had several cases where we had debt forgiveness, like the HIPIC, but still, few years down the line, we are still having now 20 African countries that is either in high risk of debt distress or already in debt distress. So, and debt soaring by about 170% since the year 2010. These are not trends that we can gloss over, because this has implications for debt refinancing, it has implications for debt repayment and debt servicing, which is taking about almost 13% of Africa's gross government revenue, taking resources away from the core business of governance, which is to invest in human capital, to invest in infrastructure, to invest in education and health and other things that will create growth for the continent. So we seem to be locked in this vicious cycle where we have high borrowing costs for several reasons we discussed today and yesterday, but we also have high vulnerabilities because our fiscal space is small and that repayment is difficult, and because of that, when the repayments falls due, countries scramble to use resources that should be used for core business of government for servicing debt. So that recurrent refinancing risks is a major challenge for the continent. So why I gave this background is that our expectation, that sets our expectation, because the Debt Management Forum is not a standalone initiative. We started from establishing the Public Financial Management Academy for Africa, and that Public Financial Management Academy is meant to train African public servants, debt management officers, officials in the central banks and in the ministries of finance across the continent on the key principles of mobilizing revenue, public expenditure planning, sustainable borrowing, macro fiscal planning, but also transparency and audit issues to ensure that we borrow correctly. Because debt is not a problem in development. Debt for growth is a known development model. but the problem is the quality of debt, what I call debt productivity. If you are borrowing to be productive, then you are likely going to be able to repay the principal and have some development additionalities and dividends left for the country. But in Africa, we are seeing the reverse. So that Public Financial Management Academy is already capacitating countries across the continent. And one lesson we learned is that there are several African countries that are doing very well in several aspects of public financial management, and therefore are able to avoid debt distress. But several African countries, maybe because of lack of knowledge or experience, fall into the traps of debt vulnerabilities and the debt sustainability challenges more often than not. So the purpose of this DeMFA, Debt Management Academy, Debt Management Forum for Africa, is like saying, let's come home as Africans to talk frankly to each other on what are the sources of our debt vulnerabilities. How can we avoid them? How can we set up early warning systems to ensure that countries don't get into a debt sustainability challenge, so that you don't go through the painful and very, very painful and complex loop of trying to do debt restructuring. Like we have heard from Zambia, we have heard from Ghana, we have heard from Ethiopia and other countries. So how can we avoid getting there in the first place? But the other point is, how can we avoid borrowing for consumption and avoid borrowing resources that is going to leak through the system in terms of corruption, in terms of wrong ratings of our countries due to information asymmetry that we have heard also from the credit rating agencies, but also through illicit financial flows or international profit shifting, which collectively costs Africa almost $587 billion every year. That means daily the continent is losing, my sister, $1.6 billion. Even today, yesterday, tomorrow, every day we are losing that amount of money. So how can we strengthen our macro fiscal frameworks, strengthen our regulations, strengthen our accountability systems to make sure that those leakages do not happen? And then we can keep those resources internally and not have to run to the market to borrow all the time. So there are very, very many reasons why this Debt Management Forum for Africa should just focus on that frank discussion among Africans in order to find homegrown solutions to our problems. Because while debt restructuring, debt service deferment like the DSSI we had, debt service suspension initiative, or the whole discussion around common framework is helpful only temporarily, is because it doesn't address the roots of the problem, the structural issues within Africa's economies that needs to be addressed in order to ensure that when we borrow, it is productive, and when we borrow, we are able to repair, and we're not going to get into these big challenges that we have. So for me, my long and short-term expectation is that Africans start becoming very frank among each other, and that then leads to peer-to-peer pressure in terms of, hey, this country, we did it, you can do it. It will be positive enhancement for countries to know it is possible to do this. But also learning lessons from those who have gone through the painful processes of debt restructuring on how to do it, so that we are not going to be shortchanged every time that it becomes the turn of another country to do it. And then also, more importantly, because we don't live in an island, the African economy is globalized, and we have to engage with the global community. And that is why you have had a lot of discussions on how do we engage with the credit rating agencies to ensure that the ratings on Africa reduces this Africa premium, which is costing the continent about $74 billion every year. So if, as Africans, we come together and we can learn lessons from those who have experiences dealing with the rating agencies, who are performing well and understand understand what they are doing so that we can also do it across the continent. Then we're able to lift each other up so that in our engagement with the rating agencies, we are able to get better ratings just by maybe providing better quality of data that is reliable and timely, and also addressing the fundamentals of those indicators that they look at before they come, so that we have credible macroeconomic policy environments that will earn us, better ratings. That also will help us quite a lot. So it's also about preparing African countries to engage with the global community, like the credit rating agencies. But also it includes preparing African countries, for example, in this discussion that is going on about reform of the global financial architecture, including the reform of the debt architecture. What is it that we should be asking for? Because it's very easy to go to such negotiations with sentiments, without facts. And then you go there, you talk, you come back, the situation continues. So we need to be able to build our analytical capacity collectively so that we can engage properly with the global financial architecture. And finally, also in how we contract debt. How do we negotiate our debt? What are the terms of the contracts? We heard from the Africa Legal Support Facility, just simple sentences and wordings of sentences in the contract means totally big different things for countries. So we need as much as possible to ensure that we can help each other to have better negotiations and get better deals from the creditors. And there are several reasons we heard during the meetings why this particular initiative is very important. And for me, the short-term takeaways from here, I was so excited to hear the calls by governments across the continent to learn more about contract negotiations. How do they contract the debt? And that is why we are going to be launching that Global Community of Practice regular series, that we are going to get countries that are interested in that to work with experts to try and understand that better.
That was that conversation with Professor Kevin Rahman, the Chief Economist of African Development Bank.